All right, what's up, Bulldogs? Hey, I've been doing a lot of live streams lately. It's been fun. It's good. I thought I would go a different topic today and talk about trading because I know a lot of you guys you get upset at me. When I say you're never going to get stock or you're never going to make money or get rich in the stock market. That's a thing. But so I wanted to present the other side of this with an actual sound, strategy that you could use to actually make money in the stock market in doing trading, active trading, as opposed to when I talk about, hey, long term, 15, 20, 30 years. I really think that real estate's a better investment for that type of thing. But I brought on an expert here, Richie, who has a great amount of expertise in the field, has built software to actually automate trading, and I thought, hey, let's break this down and let's talk about this. So welcome, Richie.
Thanks, John.
Yeah. So I mean, I guess this is the thing, right? Because uh, the big thing that I've always issue I've had with the stock market and with people trying to make money in the stock market and trading is that you know you're competing against professional traders, right? I mean, that's the
Absolutely.
thing, is it's like, especially people that are mostly doing unsophisticated things like buying, just doing a regular buy or sell, trying to day trade stocks, things like that. They're not even using options. It's like, it feels like they're just going to get their butt whooped. So how does, is it actually possible for, just the average guy to make money actually trading in the stock market and beat the market?
Yeah, so the short answer is yes, but I'll give you a much longer one.
Okay.
To your point, there is a big difference between the everyday trader who's using their laptop or an app on their phone and the big Wall Street institutions. There's a number of things that are different about it. First, the professional traders get paid a salary to spend all their time doing this, and everyday traders usually have a day job or a family or other responsibilities. They play in very different environments, in that the retail brokers that are available to everyday people are different than the brokers that the big institutions are using. But the biggest or the difference I would focus on in modern times is that the big Wall Street institutions are using algorithmic trading. So it's not even necessarily people that you're competing against. It's usually teams of people, but also these systems and these algorithms that can process things very quickly, do advanced research and advanced trade automation and placement. And that environment is just they're just in a completely different class from the everyday trader. Now, there's been advances that are evening the playing field. Our company Forethought, I'd like to put among that. But I would say overall, for an everyday trader to really consistently make a profit, they should target those differences and try to overcome them. So it's about going in and making sure that they have their own trading ideas, making sure that they execute them in a professional manner, not just a simple buy or sell, as you suggested. And also, to the degree possible, you want to have that automation and advanced features as well.
Okay, yeah, that makes sense. Yeah, it's kind of funny because I think a lot of people that follow me don't know that I at one point did a lot of options trading, complex options
Hmm.
trading. My favorite option trade was the Iron Condor, and
Right.
I made a good amount of money doing that. I would make 10-15% returns on my money per month, but it was a lot of work. And I think the thing is, and the reason why I don't really talk about that much or even encourage people doing that is because um, I think most people aren't at that sophistication level to do that. And when I talk about stock market, they think 401k, mutual fund, S&P 500
Right.
index funds, right? Those are the thing. I feel like those are suckers bets with someone's money because it's such a long term thing. It's like you can't really you're not going to become rich until you're like 70 or 80 years old. But what you're talking about is more of akin to kind of what I was doing with options trading, right? Where it's sophisticated strategy that you're really making money, actively trading, as opposed to like passively put your money in an S&P 500 ETF, which I think a lot of people think is good advice, but it's not going to get you rich, right?
So putting your money in a long-term asset like that, the S&P tends to grow. It also has, years like this year where it takes a big dip. So overall, you're looking at about 8% a year, roughly, if you
Right.
spread it all over history. Of course, that actually looks like a little bit bigger percentages and then dips, and so year over year it can change. That's obviously, if you're starting with a small amount of money, it's going to take you a long time to grow that to a bigger amount. Actively trading can generate much higher returns. And so the positions that we see hedge funds usually dealing with are between 20 and 60 days. These are called long short positions, or
Mm,
a long short style of trading. And so it's not necessarily every single day,
right.
but it's certainly much faster than just buying and holding.
Yeah. Okay. Okay. Yeah. Because that's the thing, is like, I wanted to just kind of clear that up, because a lot of guys are like, wait a minute, John, just a week ago, you told me that the stock market can never make you rich, and stop putting your money in the stock market. And it's like, what I'm talking about is, don't do the long term thing where you're trying to get 8% return, and then it's going to have to compound for 20 to 30 years if you want to become financially free. Because 20 to 30 years, I don't know, I'm 42. I don't, if you're 20 and it takes you 30 years, that puts you at 50, so you don't have that time. So you got to be able to do it faster. So that's why I think that it's a I just want to make that clear, that I'm not talking about, for me, for long-term investment real estate, I'm still about it. That's what I tell you guys all the time. But I wanted to present what Richie has here, because I think, a lot of you guys are still putting up the resistance and saying, well, John, I don't care. I like trading the stock market. I enjoy that. And I get it. So I was like, okay, well, fine. If I'm going to give you something about trading the stock market, at least let me give you the advice, someone who's an expert, that you're not going to get your ass burned, because I've seen too many people that have done that. And, and it's sad, because they waste their time and their money, so because they're trying to compete against, like you said, against algorithms. And
Yeah.
that's the thing. It's like, how are you going to do that as a individual trader? So okay, so you talked about the idea of hedge funds. They're trading in these long short windows. They are using sophisticated AI to do the trades, to execute the trades, to do the research. And you talked a little bit about leveling the playing field as an individual investor. How does someone actually do this? How should someone trade, and what can they actually do?
Yeah. So the first big advice I can give is, it's really important to research your own trading ideas. So there's something called the 90-90-90 rule, which is that about 90% of retail traders will lose 90% of their money within 90 days of opening the account.
Damn,
And yeah, it's brutal.
that's
And what's
harsh.
actually interesting is, if you look at the statistics, they almost all own the same things, and
Yeah.
it's because they're getting their information from the same sources. So a lot of people are not actually researching and generating their own trading ideas the way a professional would. What they're doing instead is they're looking on Reddit, or maybe the news, or some other source, maybe a friend who gives them a trading idea. So they
Mhm.
don't actually really know what they own. They don't know what moves that stock. They haven't done the research. They're given the idea. So their version of research is just kind of searching for other people's ideas, and they find one they like, and they try it, rather than generating it themselves. And so that would be advice number one. And then advice number two is, there is some learning that you need to do, to not just do a simple buy or sell, to take those advanced positions. Like, for example, nobody is born knowing how to do an iron condor, to what you did earlier, right? That's something that takes a little bit of research as well.
Okay, so maybe just a good example of this that's relevant today. Which, again, I don't know which direction the stock is going to go, right? But I think a lot of people are like, let's buy Rumble stock, right?
Mhm.
Because Andrew Tate got deplatformed, he signed with Rumble, and it's like, I think a lot of people think that they're smart doing that, and maybe they are. Maybe it'll take off and go crazy, maybe in the long term. But is that kind of one of those examples where it's like, the sophisticated trader isn't just being like, all right, Andrew Tate signed with Rumble, he moved over to Rumble, so let's buy the Rumble stock. You know what I mean? Is that an example of that, or am I off base?
Yeah, no, that's exactly right. Because think about the different players there, and that they might have conflict of interest. For example, obviously Andrew Tate would want you to buy it because it pushes his stock up. The the retail brokers, they just want you to trade as much as possible, because that's how they make money.
Right.
So you have to look at where the information's coming from, and a lot of the times it's coming from a place where there's a conflict of interest.
Yep. Okay. Yeah, that makes sense. Okay. And I guess with something like Rumble stock, for instance, it's almost like by the time that you know anything about it, isn't it almost always baked already into the price? Isn't that kind of the issue with a lot of the
A
retail
lot of
investors
things
that
are.
yeah.
Obviously, there's exceptions, but a lot is baked into the price. And so part of good research is trying to find maybe catalyst or things that are not.
Right. Okay.
Yeah.
And then so then I mean that kind of brings us to a big question is what are the mistakes, if you had to summarize maybe three big mistakes that retail investors are making, that
Mhm.
just, maybe guys that are listening to this, watching my channel that are just trading the stock market, what are the things that they're doing that they can stop doing, or what that's causing them that causes that statistic of 90% of retail traders in the first 90 days lose 90% of their of what they have.
Yeah, so I'll break it down sort of into three main problems that
Mhm.
the sort of everyday trader faces. The first one we already talked about a little bit. It's finding good trading ideas.
Mhm.
It's not enough to just see it on Reddit or see a news thing talk about a stock. You need to really fundamentally know what you own, and you need to know what moves it. So there's a research piece there, and the solution to that, well, for me, it took mentorship. I live and work obviously on Wall Street, so I was around people that could kind of show me how to do this research. But ultimately, at the end of the day, it's extensive research to generate your own trading ideas. So that's sort of the problem number one, and the solution around it. And most individual traders are not doing that research. But then let's say you do the research. You
Right.
now have this second problem of executing those good trading ideas. So you
Yeah.
found a fundamentally solid idea. Um, and now you need to execute a position on that. And what's fascinating is I've sat with friends and we've both had the same idea, sort of done the same research. And I remember this one time we a friend of mine did we had the same research. We placed positions, but he was a
Right.
better trader than me. My trade broke even and his had almost doubled. And that was
Mhm.
with the same research and the same idea. So it's
Yeah.
not just about doing the research. You also have to know how to execute the trade in a professional way. And then what's funny is that when you start doing both of those things, you'll start making money, but you'll realize you have a second job. Because by the
Right.
time you've done all the learning required to execute the trades
Yeah.
correctly, and by the time you're doing this extensive research every single day, then you're making money, but trading is so time consuming to do it
Yeah.
correctly. So the third problem to that is really how time consuming trading can be. And the solution to that one is interesting. So I'll take a step back and quickly talk about forethought. So I'm a CPA and also the CEO of a technology company called Forethought, and we primarily make software for hedge funds. So we
Mhm.
build technology, and it's been recognized for funding by the National Science Foundation, which is a U.S. government agency. It's really good technology, but it's primarily we've been giving it to hedge funds,
Right.
and that software it is a way to trade algorithmically without having to code.
Right.
So what happened with me personally is I once I was able to finally find and execute trades, I had this second job and I was already a CPA and a programmer, so I turned to coding and algorithms to try and get out of the time commitment that it took to trade properly.
Yeah.
But what I was finding is that coding these algorithms also takes a lot of time. So I was basically replacing one time sink with another.
Yeah.
And so the idea was to create something where you didn't have to code, to give you something where you could kind of drag and drop instead of coding, and then it would go a lot faster.
Right.
And so I took this idea and I found some of the best financial minds on Wall Street. I mean, the people behind this are from EY, JP Morgan, Bloomberg, Citi, like huge financial institutions, as well as universities like MIT. Like it's just a great team behind it. And so we've kind of created a way for you to trade algorithmically without having to code it all out, which
Okay.
even if you're a coder saves you a ton of time, but most of the great traders are not coders. And
Right.
so that was really a software that we envisioned for smaller hedge funds to let them compete with the bigger ones, because those
Mhm.
are people that they don't have enough money to hire a team of coders to build algorithms, but what they do have is a great sense of financial wisdom and how to a good knowing of how to place trades. So they're like the prime people that would have good positions if they could automate them and automate some of that research. So trading is too time consuming is sort of the last problem you'll face, and that's really what the company that we have is really found on, is just solving that problem.
Okay, yeah, that definitely makes sense, and that does parallel my experiences, because I remember when I first figured out about options trading and doing complex options, I was like, wow, this is magic. Like, why doesn't everyone do this? And then I started to realize, just like you said, the second problem of once I had the ideas, then it was like, how do you put on the trade? And that's not easy. Like, you can
No,
screw it up. I mean, especially
absolutely.
something, options trades have multiple, and there's multiple ways to do it. You can hedge in one way, you can do a covered call, you can, like, there's a lot of different ways you can execute that same trade, and some of them have better characteristics, and then I got into the point of, just like you're saying, I realized that as I started researching this more, I realized that I shouldn't have more than 2 to 5% of my bankroll in any one trade. And then I was like, wait a minute, that means I have to put on 20 to 50 trades at all times and manage the deltas and the gammas on all of
Hmm.
those trades. And it was like, most people that are listening to me don't even know what the hell I'm talking about
Right,
right now. But that's the whole point, is like, that's the level that are required in order to actually be successful at it. And that's a lot different than, hey, I think Apple's going to go up, I'm going to buy Apple. Or even like this, the sophistication of, I could buy an option, so I'm leveraged on Apple. A lot of the Robinhood traders that are
right,
like learning basic options, but it's not enough. It's not enough to compete. And then, like you said, like, for me, it was just like, that's why I stopped doing it. Is I was like, I can't manage 50 trades at one time. It's a job. It
right.
really is a job, and it's a stressful job at that. So
Yes.
because then when your trades go wrong, you have to fix the trade and fix, it was a lot. It was a lot. So that's it. So then, okay. Um, so give me some examples then of, or maybe just a good example, because I think, again, I think a lot of people don't really, they may not get what we're talking about here, but maybe a clear example of what is an algorithmic trade that someone could execute.
Sure. I can actually, I'll show one if I can share my screen. Maybe
Oh,
that'd
sure, yeah,
probably be the easiest thing to do. And what I'll do is I'll show one, but I'm gonna actually walk through it manually, because if you just see
okay,
the algorithm, there's not much to say. I mean, it's super fast. It's a computer, right? So just process it very quickly. But we'll walk through an algorithm that I use called pull forward demand,
hmm
and I'll kind of explain it and show you what it's doing. So if you tell me if you can see my screen.
Let me see here. Okay, let me just add it to the stream here. Okay, yep, I can see your stream now.
You seen it? Okay, great.
Yeah.
So obviously everyone's familiar with the COVID-19 pandemic at this point. And one of the things that happened in the US, and I think other countries around the world, was when this first started hitting, people ran to the stores and bought all of the toilet paper, kind of stockpiling toilet paper.
Right.
And so this is an article from, let's see, it's from September 28th, 2020. And it says toilet paper demand has spiked 845%, which is wild. But what's interesting is if you look at like an article about toilet paper, just what is that? Not even a year later, we're seeing toilet paper sales drop after a year of panic buying. And
Right.
that's really what pull forward demand is. So
hmm
pull forward demand is some world event causes people to buy something now that they otherwise would have bought, slowly over time, or maybe only in the future. So normally people buy maybe one pack of toilet paper a month, but now people are buying all of the toilet paper and they're stockpiling it in their garage. So that does two things when that happens. One, obviously, the toilet paper companies, they make more money now because people are buying now. But then in the future, everybody's got all this toilet paper in their garage. They don't need to go buy.
hmm
So you have higher income now and lower income in the future. And that's pull forward demand. And so we built an algorithm around that concept. And the algorithm itself doesn't really know too much about the pandemic or any of this news. But what it's really good at doing is reading financial statements. So if you remember, that first problem is like generating good trading ideas, and the solution is a ton of research. This is what I'm talking about. And this is why the everyday trader has a hard time competing with the professionals, because the professionals go to places like this. This is called Edgar. It's on the SEC website. And it's just thousands of PDFs. Like I could go through, it's just a whole bunch, and all of these are hundreds of pages long, and there's charts and footnotes, and these are just all of the company filings. So an algorithm can crawl through this really, really quickly. But obviously to do it manually is pretty intense. So if we go to this one filing right here, this is Form 10Q, and we're actually looking at Zoom now. So Zoom's another company that obviously benefited from the pandemic. Businesses couldn't get people to go into work, so they had to buy Zoom in order to let them work remotely. And there's people that think that over time we would have all ended up on Zoom or something like Zoom anyways, but the pandemic made it happen faster. So in retrospect, like if we look at the Zoom chart, we can go over here. You see this bubble here, and that's the pull forward demand. But it's really hard to see that in the moment, because in the like we can go back on our high horses now in the future and say, oh, of course everybody bought Zoom, and then they didn't need it in the future because they already bought it early. So Zoom's growth that would have happened next year already happened because of the pandemic. It's easy to say that now. But what was happening at the time was people were reading articles about how remote work is happening. The pandemic's there was no vaccine. This is gonna last. And so the news was telling a very different story. So if we crawl through this document, and again, you can see what I mean here. Like this is just brutal to go through manually, but these are what some of the hedge fund researchers do. This algorithm basically crawled through this document, and it went to this one page right here, and it saw something strange. So this compares the income in 2018 to 2019, and we see Zoom at this point is a pretty established company. And we see a huge, like this is almost 3 times as big in 2019 as it is in 2018. So what that tells us is pull forward demand might be happening here. And what's interesting is this happened in, like this was released, I think, in August of 2020, this report, and the stock continued to go up for like 3 or 4 months. But our algorithm was already expecting that a year down the line, 2 years down, in the future, this stock's going to really tank because of the pull forward demand. So and this is where you get to the problem number 2, the executing good trading ideas. It's not simple to execute a trade that will profit if Zoom goes down far in the future. That's when you get into options and some of these things, right? So not only does the algorithm do all of this reading and going through the SEC database to decide on its own after looking at thousands of these documents and thousands of stocks that Zoom is the one it wants to do something with pull forward demand on, it also then places that position. And so it places a trade, and sure enough, eventually the news cycle breaks and Wall Street realizes that the pull forward demand had already happened to Zoom, and Zoom takes a dive, and with a lot of money was made with that algorithm. So that's the kind of thing that professional traders are doing, and sometimes they're doing it with algorithms at the bigger places. The smaller places are doing it manually, but this is what the everyday trader is up against. And this is why the everyday trader needs to either get comfortable doing this level of research or use algorithms like the pull forward demand algorithm to do this research for them.
That makes sense. Yeah, because I think the average trader might have just looked at that and said, okay, well, Zoom is going up and they're just exploding now, so they're just going to continue to go up, and not realize that they had borrowed growth from the next year that they would have reached that growth, but they had borrowed it, and so then they don't have as much to grow, which makes a lot of sense. And of course, I there's probably a lot more complex examples of using multiple data points to figure that out. Rather than just that one, because someone might be looking at that and say, well, can I just see that can I just look at earnings reports and see if it suddenly had a lot of growth? And I'm sure there's probably more data points than just that, right? Okay, so that's pretty cool. That's pretty interesting. So then you would use an algorithm to automatically parse through all of that information. You've probably got a few different strategies in there that it's looking for, right? And then it's looking for candidates perhaps that would meet that criteria, and that's giving you the trading ideas rather than the average person saying, well, Andrew Tate went to Rumble, so
exactly. We're not just reading off Reddit, when this algorithm was running, obviously we didn't know the future of Zoom yet. It hadn't happened, but the algorithm sees something interesting in the financial statements and then makes sort of a judgment call based on that.
Okay. And then what else was I going to say here? So okay. So then tell me a little bit more about kind of how your software does that. Like what does it actually do? What are the pieces that connect together so that you can find the trade, and then how would you set up the actual trade to put the trade on, and then and manage that trade?
Right. So you actually have a programming background, correct?
Right. Yeah. Yeah.
So just everything I described with the Zoom thing, from
Mhm.
from a programmer perspective, how much code do you think would be involved in that? Do you think it's a lot? Do you think it's a little? Like how much like actually coding time or just ballpark would you say would require to build something like that?
I mean, I mean, if I were to try and architect something like that, I would think about, well, trying to use some kind of database to parse through all of the documents, index them, right, and then
Mhm.
write code to look for the specific uh, data points, and then normalize them into some kind of database. Try to figure out, all right, what are the actual signals that we're looking for, and then now comes a part of actually trading, putting on the trade. So then I have to create some algorithms that know how to map. Hey, I want to short this in the future. I expect the stock's going down in the future too. What does that look like? Does that look like a put option here? Does it look like what is? So I mean, I feel like that's pretty extensive. I don't
Right.
think that's something
Yeah.
that you're just gonna like do in a VB script.
Right. Yeah. It's
Right.
it's a pretty big lift.
Yeah.
And so what's interesting is, there's really been two options.
Mhm.
So the big institutions, they already have these algorithms that can do things like that. And they just use those algorithms.
Right.
Everybody else, and this is, the everyday trader as well as the smaller hedge funds, they're left doing it manually. So there are people that go in and they read, and the human brain is a pretty good computer, and they read it themselves, and they go through and they do everything manually. So the idea behind forethought is to present a new alternative. So most people don't know how to code.
Mhm.
Even if they did, it would be a huge amount of code to do something like this. So what if we could give them a different way of having the algorithm do it? And so I'll share my screen one last time and show you something else here. Can you see?
Yeah.
Yeah. So this is the actual forethought software. And the idea behind it is we can just go in and drag blocks. So like I can go
Okay.
here, I can connect this up here, press connect.
And that's
And
even connecting to not just the stock market, but crypto trading as well.
yeah, it works across asset classes. It even reads like financial statements. So you're not just looking at chart data, you're looking at what we were looking at earlier with those SEC filings. And in just like a few seconds here, we've got an algorithm created. Just dragging and dropping, it'll run a quick back test.
And you're
And
back testing it against
we
the
back test to
previous.
see if it's any good or not. We see
Uh,
this one has a big hit here, so we wouldn't want to deploy something like this.
mm.
And all of this code is being generated
Oh
really,
wow.
really quickly, just by dragging and dropping. And the user never has to look at the code. The user is
Yeah.
just moving boxes around on a screen, essentially, typing in tickers, things like that. But while they're doing that, code is actually being created. And
Oh,
so
that is
that's really what forethought does. And in addition to that, obviously, because everybody's been doing this manually for so
mhm.
long, we have something called Forethought Academy, which is a training platform to teach people how to do things algorithmically so they know sort of what boxes to move in the software. So we're really getting rid of the coding entirely to make it more accessible for everyone, but then also giving training around the algorithmic trading in order to make sure that they'll succeed with the software, because the software can be quite powerful. And so that's really been something we've been doing for small hedge funds already. And we're now starting to allow individual traders to use it as well.
Okay. Yeah. Wow. That sounds really, really powerful to use that software. Especially, I like the idea of being able to, trade in different markets, and and I saw you had like the rebalance in there. So it's like a lot of I think I would have done better if I
Yeah.
if I had that kind of software. I didn't have to manage all those trades myself all the
Yeah, the
time.
backtesting component's really big as well because
Yeah,
it's so quick to just build something and see if it's a good idea before you actually deploy it.
yeah,
Unfortunately, most people who are doing things manually, they experiment with real money in the markets, and they don't have a strong idea of what the system's going to do until they find out. And so backtesting is a good idea in general.
yeah. No, that
Yeah.
makes sense. Okay, so then now, for you guys that are just joining, Richie's been walking us through how to make profitable trades, like kind of the strategy behind this, if you want to do trading. And then he's offering a free boot camp, an automatic trader boot camp, so you can learn how to actually create automated trades. I put a link in the description below. It's totally free. So if you're interested in this, because we're going to only be able to go into so much depth, obviously, as you guys are seeing, there's a lot to this. There's a lot to learn, but he's offering a free boot camp if you want to do it. I think it's a 3-day training that they can do.
Yep. So it's completely free. You just go to the website, get your email. We start sending videos. There's 4 videos. Just kind of goes over sort of what to do with an algorithmic trade, what it is, how to do it, things like that. Again, it's completely free. It's just really meant to inform.
Okay, yeah, perfect. Yeah, click the link down below, guys, if you want to check that out. I think that it's worth looking at. I mean, if you want to do trading, don't. It just doesn't make sense to be the 90% that lose 90% of their money. Get an actual real strategy. I know some of you guys are good too. You've got some good trading strategies, but for most guys I know that are trying to trade, it's brutal out there. So this is a tool that you can use to have an advantage in the market. But yeah, get the training on it so that you at least know what you're doing, and you can see what actually, and if you're not doing it, what you're going to be competing against, right? Because honestly, like this technology, I think, like Richie was kind of alluding to, it's been a long time coming. Like it was it was a matter of time before someone developed this, so that it brings the game up to a different level. So now you're not just competing against the hedge funds, but you're competing against retail traders who have software like this and who are going to whoop your pants off. So because it is a zero-sum game in trading, unlike other things in life. So I think maybe we could get to some questions.
Sure.
Here. I know there were a few even before the stream started. Let me see. I don't know if I have access to those. Maybe you can.
I saw one. Hold on, I took a little snapshot of it. KCT asks, "Hi fellas, can you consistently make money in day trading? I read articles saying in the long run, 95% or more of day traders are in the red. Is it just speculation since at the end of the day, no one can predict if a coin or stock will go up or down? So what is the strategy exactly? Can you please explain signals, predictions, etc.?" Okay, so that's a lot.
That's a good one.
Yeah. And then he also says, "Also, do you recommend trading once a week or once a month rather than every day?" So we find that most of the hedge funds are doing what's called a long short portfolio. And so those active positions are between 20 to 60 days long. So they're not necessarily day trading. They're the positions are done, not a hugely long window, but long when you consider a day. And so we would probably recommend that you trade in that window. The retail brokers would love for you to day trade because they get paid basically every time you place a trade.
Right.
But we find that the most profitable trades are generally in the 20 to 60 day window. And he mentioned that 95% thing that goes right on with what we were saying earlier about the 90-90-90 rule. So yeah, I would say I would recommend doing a 20 to 60 day window.
Okay. Let me see here. There were a couple of questions that came in through here, or a couple of things to address here. Come back, Dad said, "I think stocks are like the chess of financial freedom." That's a good. I think that's a good way of looking at it.
I like that.
Let's see here. Okay, here's Wolfgang said, "Trading without the right research and execution to optimize capturing gains and limiting losses, gambling for sure." do you think
Yeah, I
about
mean, I would agree. That's why you have to do the research and do the work to execute. So yeah, I'm in complete agreement there.
And guys, if you have some questions for Richie, just drop them in the chat here. We'll address this one too.
Yeah, anyone who knows how to rip out money consistently from the stock market would never need to sell a product. That would keep it a secret. That
Yeah,
is true. And so with our hedge funds, like you'll notice that we are not a hedge fund.
right.
We make software. And so we don't prescribe the algorithms that the hedge funds are using. So we give them the tools to build algorithms. They come up with their own trading ideas. They come up with their own ideas for how the algorithms work. If we were as good at that as they were, then we probably wouldn't sell it. But we're not. So we build the software for hedge funds because we're really developers more than we are traders.
Yeah, that makes sense. And then I think part of things like this is that there's only so much market liquidity as well, and especially when you have really specific trade ideas. That was one thing also that that stopped me too, was that I couldn't just trade as much as I wanted to when I found a really good trade idea, because I was limited by the liquidity. Otherwise, the market makers were going to, squeeze me on the difference between the bid and ask, and so it was or even just trying to do some of the options I want to trade. So I think that just because how to like I don't think there's anyone that can totally rip money consistently from the stock market, right? It's like you can only take so much at a time. So that otherwise hedge funds would just be like, all right, here's our trade, we're just going to put $1 billion into this trade, and then we'll just double that money. But you can't do that. They have to do multiple trades. And so I think
the other thing you see is you'll see hedge fund performance change drastically sort of as the market goes through different phases, because there are people that are like really, really optimized for one phase of the market, and then something different will happen in the economy. And like that's like their style or their intelligence, or they're just not as optimized for the next sort of paradigm of the market. So you see performance amongst hedge funds kind of change as the market changes.
What do you think about this one? What's your opinion on Forex?
Forex is really interesting. Especially right now, the US dollar is very strong. It's also really interesting from an algorithmic standpoint, because a lot of Forex trading is done algorithmically, particularly around carry rules, which are where you sort of borrow in different currencies to sort of play with the interest rates. So it's a really interesting spot from an algorithmic trading standpoint.
Now, there's a lot of scams in Forex trading, though, right? That are.
Oh yeah, I mean, you have to be careful who you listen to, no matter what. Again, most the information comes with conflicts of interest. So for us, we sell a software license, right? So we don't make money based on how often you trade or what you buy or things like that. But people giving you information often do make money based on, either they have an agreement with the broker to get you to trade as much as possible, which is where day trading has become such a meme, is because we'll trade every day, and then they get paid based on how many trades you place. Obviously the Reddit, people have their own positions that they want to pump. So a lot of the information comes with a conflict of interest.
Yeah. I've seen a lot of the people that are trying to get everyone to be day traders or Forex traders, promise them all this money. And it's like those I would watch out for.
I'd say be very careful with who you listen to.
It's really interesting too that the dollar is so strong. It surprised me, because I have some physical gold, and it's like I've been watching the gold price tank, and I'm like, with this massive inflation, it's just crazy that the dollar is holding its value. But I guess even it shows you the value of having a world reserve currency, is that even when you print a shit ton of it, you can still retain your position. But I don't know how long that will last. I think that's it's pretty scary right now.
Yeah, I mean, it depends. It depends on sort of what the other major economic players do and how well they handle the next few years. But there's something obviously very special about being able to print money, and every country accepts it, and that's where the U.S. has a pretty unique advantage for now, at least.
Yeah, tax the world.
Yeah,
but yeah, what do you think, just out of curiosity, about gold right now?
So I don't have a strong opinion on gold. It's not really an asset I look at very often. I think that yes, there's a lot of inflation in the U.S., but the whole world is hurting. There's inflation all the way throughout, and the U.S. dollar is doing very well compared to the other currencies. So I think that's maybe possibly an explanation for why it's doing what it's doing right now, but it's not really an asset that I study in detail.
That's interesting. I didn't really think about that. I mean, because I guess the whole world's printing money
Yeah.
right now, and so everyone is. But maybe the dollar is still. I guess a lot of countries are probably printing a lot more money relative to the total their total GDP than
Right.
the U.S.
And they don't have the reserve currency to fall back on.
Right. Exactly. All right. CD says, can you make a living trading stocks?
I believe you can. And so you have to solve those three problems. You have to be able to generate your own trading ideas. You have to be able to execute them. And you have to either do something to offset the time that it requires or find the time. So, but I think if you can do those three things, you can make a living trading stocks.
Yeah. Yeah. I would agree. Like I said, at one point I was trading options and I felt like I could have done that. I could have made some pretty decent money, but it was an actual living. I had to actually work because at one point when I was, putting on 20, 30 trades at a time, it was at least 4 or 5 hours a day of managing all those trades. I'm sure. So, let's see. There are a couple. Okay. Oh, here's one here. Oh, okay. Well, here's a good one. NOJ says, I'm a full-time trader selling options, but only with Tastyworks as their margins are better than others. Would this work in my case?
So it's interesting. You say you're a full-time trader. So I like that term because it means you're probably doing the research and executing correctly, it sounds like, and you're, it's a full-time job. So I think that looking at algorithmic trading as a just do some research into it. You can check out the automatic trader bootcamp that we have, or you can do some research on your own. I think it could probably save you a lot of time. I'm not going to speak to Tastyworks or the broker or anything like that. I don't know them or what the situation there is, but I would say that you should definitely look into algorithms because maybe that full time could become part time, and could be trading from your laptop and then sort of going on your next adventure or wherever it is you choose to do with your time.
Yeah, that's good. That's definitely check out the boot camp. I mean, you might as well at least check it out and see, because if you can save a bunch of time by using algorithmic trading and you're already successful without it, that could be something real big for you. Chris says, what's the hardest thing about trading?
I would say that, I mean, it sort of depends on your phase. I think everybody goes through those same three phases. So at a certain point, the hardest point is finding the ideas. Then later, the hardest point is, okay, you've got good ideas, but you're not executing as well as some of those professional traders. And then once you're finally doing that, I think most people end up with the trading is too time consuming problem. And I guess I'll say that's the hardest one, because I think that's one that a lot of people don't really ever solve. I think with enough time and practice, you can get good at researching, you can get good at executing, but doing it quickly, I mean, really only, it wasn't even possible for the big guys until, a handful of years ago with the algorithmic trading. And it's only just now being possible for the smaller guys. So I'd say that the time consuming piece is the hardest part.
Yeah, that makes sense. I mean, that's why like quants get paid so much money too, right? Is because
upwards of $1 million a year sometimes.
Yeah, that's a good field to go in if you're a programmer, by the way. Although maybe it won't be so good now that there's now that you can do drag and drop algorithms. Let's see here. Dan Donner said, how could forethought help a trader achieve consistency exactly?
Yeah. So a lot of the problems that traders face is that it can be emotional. So I remember days where I felt like a hero and I would be a little risky, and then I would just get smacked by the market. And the next day I was playing too conservative because I was scared about what happened recently and I was not taking opportunities. So algorithms are very good at taking the emotion out of things. When you systematize your thinking, and even if you're not going to do algorithmic trading, I would recommend taking a piece of paper and actually drawing out your trading system, your rules, things like that, because that's really where consistency comes from. Consistency comes from systematic trading. And I think the best way to do that is with algorithms, but it's not the only way. You can execute on a system manually. So I would say that forethoughts there, I mean, both the training and obviously the software is oriented towards this idea of systematic trading, and I think that absolutely will lead to consistency. But there's other ways to get there as well.
Yeah, that makes perfect sense. Yeah, when I was really specializing on iron condors, I remember I had to make an actual trading rules document that would say that if this happens, if it goes out of range here, then I'm going to change this trade. I'm going to roll this one forward or whatever it was, so that or I'm just going to close the trade and take the loss at minus 20% or what. I had a set of rules for that, and I had to do it because if I didn't have those rules, my emotions would get the best of me, and I would be like, oh yeah, it's gonna it's it's the VIX is gonna die down, it's gonna get in there, it's gonna make it back, and then I would lose 100% instead of getting my 20% gain. You know what I mean? So it was like, yeah, having the rules, and that's the thing, the beauty I think of having, like you said, like with your software, is that you don't even have to, because I mean the rules were there for me to manually execute them, but if you have it automated, shoot, then you don't even have to worry about that, and you can't mess it up, you can't get emotional about it, you can't fudge the rules and say, no, I think it's going to come back down, it'll be all right, we're not going to get busted out of this trade. But
yeah, and what's fun about algorithms is if you build a really good system, then consistency often means stepping away and just kind of checking in every now and then. And that's a good life, right? You're just occasionally checking in on your laptop, making sure your account's still growing while you're out living your life. And that can be a path to consistency if you set up a really good system.
Yeah. How many of you guys, by the way, put a 1 in the chat if you're actively trading now, a 2 if you're not, just to kind of get an idea of it. And actually, yeah, I'm curious about that. Let me see here. And then Ozzy said, can forethought help me with futures as well?
Yeah, I think a lot of the research tools that we have are already able to help in that department. Futures is an asset that we currently don't have in the software, but it is in our database and it's being added. I would say early next year, Forethought will probably support futures as well.
Okay, cool. That's awesome. Yeah, I remember getting my butt kicked in futures. That leverage is so drastic there. It moves fast on you. Let's see. Okay. Does Forethought only work with specific brokers, or can it work with any broker?
Forethought is not necessarily tied to your broker. So if you want to set the algorithm to place trades, what it'll do for consumers and for hedge funds, it's a little bit different. But for the everyday trader, it'll send you notifications to help you place the trade. It'll tell you what the algorithm wants you to do. It'll go right to your phone, but you would still place the trade with your broker. And there's reasons with that from a business insurance and SEC standpoint that we don't have direct trading for individual traders. But that means that it doesn't matter what broker you have, Forethought will work with it.
Okay, that makes sense. That's good. Let's see here.
As an interesting note, if something only works with a specific broker, that's an indication that there's a conflict of interest.
Right. Yeah. Yeah, that's true. Captain Price says, for futures algorithmic drag and drop programming, check out Ninja Shark indicators for fun, non-coding way. For any complex system, you still need to babysit a bit when to run it, when to turn it off. I don't know if he's advertising Ninja Shark indicators, or I don't know. Does that ring a bell with you?
Yeah, it doesn't ring a bell for me, but there are a handful of things that'll kind of alert you with different things. I would say just make sure that you're not dealing with something that's like a drop-down menu and it only has a handful of things it can do. Because in general, you want to, again, research your own ideas, not take them from somewhere. So with our software, we've made sure that, because again, we really started with hedge funds. They're not doing, following along with other traders. They're really building their own algorithms from the start at a really deep level. And so we sort of pride ourselves on the nerd programming word as being Turing complete, but it's the idea that you can build anything with Forethought. So just be careful if you're like locked into only a couple kinds of trades. That's, again, it might be an indicator that there's a conflict of interest there somewhere.
Okay, and he does say it's from personal experience, so it does look like it's legitimate here. So
yeah, cool.
Okay, cool. I see a lot of 1s, a couple of 2s in there. So yeah, so a lot of you guys are trading. Okay, so that's good. Then if you're trading right now, definitely make sure that you click the link and join the free boot camp, because I think that you're going to find that really helpful for seeing if you can get. I mean, you know, if I could have done automated trading back when I was really heavily into it, I think I would have saved me a lot of time. So maybe I'd still be doing it. Let's see. Yeah, I think that's pretty. Oh, wait a minute. We got one from. Oh, a couple questions here. What's your sentiment on trading options?
Yeah, I mean, I think options are great. Obviously, they're popular in the U.S. for I mean, a number of reasons. It provides leverage. It's nice because you sort of cap your losses as long as you're trading in a responsible way. So yeah, I have nothing but good things to say. It's just, you know, use caution. They're complicated, and you can lose your shirt. But if you know what you're doing with options, I think they're great.
Yeah. Okay. All right. I think that's pretty much it. So yeah. So guys, check it out, and yeah, I'm sure that Richie will answer any kind of your questions once you get into
Yeah, I see one from Peter. Can your backtesting engine run on a basket of symbols? Let's say 100 crypto pairs. So that it can do a number of permutations. So by permutation, what I mean is trying different tickers out in the algorithm, trying different percentages. So yes, the short answer is yes.
Okay, yeah. Cool. All right. Well, thanks for joining, Richie. Appreciate you taking the time, and yeah, looking forward to the trading boot camp, and we'll we'll definitely have to talk again more and see, you know, where you're at with this, because I think it's really cool business, and you know, I think this is the future. You know, I think that once you unleash this, like, people are going to have it in order to compete. So that's good. I think that's you know, I've read if you read the book 0 to 1 by Peter Thiel, you know, this I think this is going beyond going from the 0 to 1. So
I hope so. I think so too. Yeah.
All right, Richie.
Awesome. Thank you for having me, John.
Yeah. Take care.
Take care.